Hi everyone and welcome to the Propcast. Today's episode is going to be slightly different to the other ones you've listened to on the other season. So not only is it a bonus episode, but we're also joined by more than one guest to talk with the founder of Relevation, which is the leading digital fundraising summit for PropTechs. And we'll also be talking through the changing landscape of VC. So I'd like to welcome Idriss Goossens, the founder of Relevation, PropTech Lab and the European PropTech Association, but also to our special guests who are joining us today from the US and also the UK. They're fairly well-known names in the VC space globally. So without further ado, I'd like to welcome Alain Waha, who's co-founder of Cogital and Leads Ventures and Digital Strategy Services. Also, Travis Connors, co-founder of Building Ventures. And last but not least, Alexandra Nicoletti from Camber Creek. Now, usually I would go through everyone's bios, but rather than listening to me speak for the next 10 minutes, I thought we'd get straight into the questions and let our guests tell you how they actually got into this space and a little bit about themselves. So, Idriss, why don't we start you off? You're the glue to this. So talk us through how you got into sort of PropTech and about, how you got to where you are now.
Sure. Well, first of all, thanks a lot for the invitation. So when I got to PropTech, well, it's already about 10 years ago. I actually started my career in that space. Before that, the word PropTech even existed. And so I worked in 3 different PropTech companies with an important role. And then finally, I really saw about 4 years ago, almost 5 now, that we were in a unique momentum of innovation and of digitization in construction and real estate. And so I decided to create PropTech Lab in Belgium as the real estate innovators community. So the mission of PropTech Lab is really to foster innovations in construction and real estate. So we typically help startups raising capital, we accelerate them, and we also advise large construction and real estate firms on their innovation strategy, on their vision for the future. So today it represents 175 company members and grow at a speed of 10% per month. But I realized, in fact, 3 years ago that in Europe you have 24 national PropTech networks, PropTech hubs. And so it's a very rich ecosystem. And each of these networks have the same mission, which is to increase the innovation maturity of their local construction and real estate ecosystem, but they focus within their home markets. And so that creates a very fragmented ecosystem. And so I decided to co-found the European PropTech Association as the sort of pan-European umbrella to coordinate the 24 national networks and to create the conditions that allow the creation of the first PropTech unicorn based in Europe. So that's the second hat. And finally, Relevation, but I might speak about that a bit later.
Yeah, we'll definitely go into that in a moment. We'll just introduce our other guest, but thank you so much for that. Now, Travis, talk us through your sort of journey, and big shout out to you and Alexandra because it's super early for you. Where are you based at the moment?
So I'm based in Boston, Massachusetts. I've been a venture capitalist for over 20 years now, but my journey to PropTech started when my current co-founder of Building Ventures, Jesse Devitt, and I invested in what would now be called an early smart cities company back in 2006. And Jesse had lived his whole life in the AEC software world. It really woke me up to the opportunity that was here and kicked off a 10-year conversation of the impact that we could have if we brought digital tools and technology into the world of construction and real estate. Like Idriss, we noticed in 2015 that the market was beginning to change the way that it thought about adopting technology, and that caused us to leave our respective firms and create Building Ventures as a platform for early stage companies to get the support they needed to drive innovation in the built environment.
And now for Alexandra, you came from obviously real estate banking into private equity, so not sort of straight into sort of VC. Talk us through your sort of journey as well.
Yeah, so I took a perhaps unconventional path to VC. So my background, as you mentioned, is really in real estate. I spent a number of years across acquisitions and asset management roles with institutional commercial real estate investors, and found myself talking about so many of the sort of pain points that we are now talking about so frequently in PropTech. There's a stat floating around, the average Fortune 500 company uses something like 40 different software solutions, and the average real estate company uses only a handful. And so, I'm very excited to be part of Camber to really shift that.
Awesome. Thank you for that. And finally, Alain, you came, from what I understand, from outside the sector, from the automotive sector. Am I right in saying that? But you've been involved in, I guess, digital transformation in the built environment for some time now. Run us through your journey.
Yeah, that's right. I think I'm the original geek. I just wanted to use technology and make it work. And so I started when computers were still the size of a house, and we put them to work to try to solve problems. And initially that was aerospace. That's who could afford those beasts and make planes fly better. And then I transferred to the automotive industry, and really that's when digital transformation started. We realized that we weren't into the making of cars or making of tires. We were in the mobility market. This was like mid-90s. So already we understood that we could use technology to make the existing business work better. So making things go better, synchronizing supply chain, re-engaging with customer. But then we realized we're actually in the mobility business, and that was societal. And so we started trying to servitize mobility. And that's where I left automotive in 2006. Private equity guys started asking me, could I look at the company here? Could I look at a company there? And I ended up in the built environment, in the built world in 2007, and discovered that technology hadn't yet arrived. And that's been my work now for the last 10, 15 years, is putting technology to work in the built environment.
Awesome. Thank you for that. And thank you for all sharing your journeys very fairly sort of briefly. We'll get into a bit more about a few of your business investments, the trends you guys have seen, whether it be in the US and across Europe, and certain hotspots of activity. But before we do that, Idriss, talk us through Relevation. Who are we expecting to join? Obviously, the guests on today's podcast will be joining, but how has it grown? Who do you want to be involved in it? What's the whole mission of it? And what does it really add to this PropTech community? Because from what I see, it's the leading event in terms of joining PropTechs to the VCs, which is so important for the growth. But just talk us through it a little bit more.
Sure. Well, I don't want to do too commercial content, so let me share a story based on numbers, right? So when the pandemic started in March 2020, with the European PropTech Association, we were monitoring on a daily basis around 3,000 PropTech startups. So all the startups that are located in EU, including UK. And we saw that roughly 50% of all of these startups could have liquidity issues in the next 3 months due to the pandemic. And so I decided to create a matchmaking events where startups, where founders willing to raise capital could engage with investors willing to invest. That was Relevation. And so it has been a great first edition, but it was still a very young company. And so I guess what is important to mention is really that Relevation is different from any kind of events that exist, I think, because it's what we call a transactional event. So it means that the purpose is really, it's not an educational event. Like there are plenty of webinars, and there is also this kind of Zoom fatigue of digital events, right? But we are transactional events where the purpose is to facilitate matchmakings, to facilitate, to allow the attendees to really create meaningful relations with the other attendees. So it's very important. And we originally started as a digital event, but our ambition is to really become a sort of reference in that very niche market, which is venture capital in the PropTech space. And so we want to contribute to bring more transparency, more efficiency in that industry, and also to maybe contribute to define the standards, because we saw that it's an industry that is not super transparent in a way. And so we will produce a lot of reports for our attendees only, like the valuation trends, the exit multiples, the fund performances, or this kind of stuff, which will be anonymized, of course. And finally, what is also exciting is that only 7 months after the launch of the company, the US giants CREtech decided to invest in Relevation to fuel our global growth. And so this year you can expect 400 founders raising capital,
Wow.
200 VCs. And what is also exciting is that we will have 50 LPs willing to invest in PropTech funds. And also more than 100 what we call high potentials. So students graduated from the top 10 world-class universities, including Oxford, Yale, Stanford, IESE from Barcelona, IE from Madrid. So top business schools who wants to find a job in the PropTech space. So we organize also in partnership with LMRE, a digital job fair. So this is what is on the menu for today. I mean, for this year, right?
Well, that's a truly global event and obviously platform, and this well, I mean, obviously LMRE, we're supporting it, but looking forward to it and just connecting everyone. Now let's talk a little bit more about the European US VC landscapes, and we have the perfect opportunity now to talk about it. Travis, maybe you can sort of start us off in terms of, you've had 10 years in the making of understanding the landscape. Is there anything you've seen in terms of sort of trends? Obviously, you've invested in, I guess, the ESG space of Measurable. What have you sort of seen?
Yeah, so I mean, our fundamental thesis when it comes to the real estate space is that what consumers want is to consume space as a service, and the reality of that means that owners now need to operate their what have historically been financial assets more like a business, which means they have to be far more attentive to the needs both of the occupants, but also all of the stakeholders. And I think that's kind of the underlying driver of the trend, that what we want in our spaces looks a lot more like hospitality. And what we require in the building operations looks a lot more like mission critical assets. And so all things like the sustainability performance, the indoor air quality that people are having, the way they use the space, the amount of friction there is to use space. I mean, COVID certainly upended everyone's thoughts around what we needed space for and what spaces we needed. But the simple reality is we still spend 95% of our time indoors. And now we have more choices about where that's going to be. And so the imperative is that owners have to deliver delightful experiences that make spaces people want to be in, to make it the appropriate place for people to do things. And all of that's going to require, while at the same time meeting new regulatory challenges. So I think that in many ways, Europe has been ahead of the US in some of these trends, particularly around sustainability, performance, and the modularization of construction and moving construction production. But we're seeing all of those things fall into the US as well, which just drives an enormous amount of founder activity by which the capital follows, which is why you've seen so much money move into the space in the last few years. And just to give a shout out to Idriss and Relevation, I think, whether it was intentional or not, the timing is perfect. It feels like the kickoff event to our return to a more normal, greater velocity in looking at doing all of these things.
Yeah, no, I agree with that. It's perfect timing. And Travis, you mentioned about sort of capital, and from what I'm seeing, obviously there's more larger investments in the US market compared to sort of Europe, yet Europe's ahead in certain hotspots like ESG. Do you know why there's more investments and high amounts of money?
It's two things. I think one, there's the maturity of many of these companies got started early. I would say that the customers are further ahead in Europe. The startups may be further ahead in the US. A number of our companies have found resonance in their value proposition in Europe in some cases before they found it here. But in general, the European startup market has been behind the US. It's really come on fire in the last 3 or 4 years. But you need both those things to make it work. There's a reason why we tend to have locuses of innovation, and it's the combination of founder energy plus capital working together. One of the wonderful things that I think about everyone having to rethink the way they work during the pandemic has been, it has taken people out of the standard, we need to meet a founder 17 times before making an investment. It's easier to make investments locally, that you realize there's a lot you can do to get to know people elsewhere, and that allows you to really just scale. I mean, we tend to invest at a very early stage, and so we tend to like to be able to get to our teams within a day. But it's made us think. We made our very first, during the pandemic, we made our first investment in Europe as a result of this, because we realize it's no further away than it is to do a deal in California.
Yeah, awesome. Are we allowed to know what that investment is?
It's a company called Go Contractor. They're based in Dublin, and it's a platform for doing learning and training so that you can get workers more to site more productively and not waste time on site doing training.
Awesome. Yeah, I'm starting to learn. There's a massive PropTech hub in Ireland, and Carol, who runs the Irish PropTech Association, she's wonderful, and she's got a great radio station.
Absolutely.
So yeah, check her out if you haven't, those listening. Now, Alexandra, talk us through what are you seeing similar things in the US as well since joining Camber Creek?
Yeah, so I'll add on to Travis's comment on the flexibility of space and just sort of increasing demand for that experience. I think, as the employer, it's really a question of how are you delivering a high quality experience for your employees, and bridging that experience from their home office and into the workplace. And then as the landlord, thinking about, your building, it might be 100%, leased, but as people come in and out on certain days, with that sort of ongoing flexibility, how do you optimize building performance in a sustainable way to really sort of meet that changing demand? And I think a great example of that is we're also an investor in Measurable, which Travis is as well, and they're doing really great things helping property owners assess and mitigate environmental impact of their buildings.
Yeah. And what would be great to hear from you, Alain, what have you seen in terms of in the UK? You said, when did you say you entered this space? Is it 2007, 2010, which is a hell of a lot earlier than other people in the VC space?
So yeah, I think there's the very broad difference in terms of the VC ecosystem in Europe and the VC ecosystem in America across all sector. But if we look at it more specifically to PropTech and ConTech, I think it is an interesting comparison to understand that I think technology it's driven by technology adoption. I think the energy of the founder that Travis mentioned, I think that energy needs to be there, and we've got some hubs in Europe. We've got Berlin, we've got London, where you have that energy, but also you have to find good clients that you can scale up and good clients that give you interaction. And I think that's where the US probably initially has had really a great head start. I think it's a very entrepreneurial type of market-driven economy. So people try things, they pilot. So as a founder, you find a receptive audience. Similar also in Australia. Interesting. The Australian states, they've got this very direct conversation, and you can do things bottom up. Europe is much more policy driven, either in the corporate or so the ability to deviate in a French or a Japanese company is like zero. So nobody pilots until there is a pilot structured program measurement system. And in the same way you saw it in the UK with the policy driven approach to forcing BIM into the market. And I think those kind of things actually format or VC ecosystem or in terms of capital efficiency, being able to quickly iterate and establish product market fit. And I think at the beginning, I think bottom up wins, but then over time, expanding and putting a fundamental structural shift into the market means that Europe becomes potentially more attractive, because you can you find a more structured environment where you can sell, iterate, and then scale. And I think if the market has structurally changed, you can scale. Whereas if you just instill that iteration, prototyping, testing like you have in the American market, then scaling becomes really capital intensive. And I think for me, that would be the the very fundamental difference between Europe and America. One is great to iterate early seeds, early traction, and then come to Europe to scale.
Yeah, and
if I can do a quick add-on there.
Yeah.
And quote the chief economist of the European Commission, Rudy Arnaud, who has been a great part of the European PropTech Association since the very beginning. He's saying that it's also a difference in the culture of entrepreneurship, because in the US, you really kind of fail fast or succeed fast, while in Europe you have this kind of more zombie culture where you try to survive on the long run, and you keep doing stuff even if it doesn't really work. So it's also about this, I assume.
Definitely, and I think when we say fail fast, what really we're saying is learn fast, learn what worked, learn what doesn't work. And so having a really efficient conversation with the market becomes really important to iterate fast. And if you've got awfully polite people that keep on welcoming you but not telling you, your product is rubbish, that's not helpful. And I see that a lot in very polite, Japanese culture. But equally, the people that have iterated but then don't have authority or a process to allow you to scale, ultimately you get false market positives. I've piloted something where it's never going to scale. There's no use for venture capitalists either.
And I guess looking at more generalist VCs, like not just built environment or PropTechs or the specialist VCs. Idriss, are you seeing these larger global players entering the market? I mean, I've had a couple approach me to sort of set up or hire one person to look at this space. Have you seen a growth in that?
Yes, certainly. I think first, generally speaking, we see that really the volumes of capital that are deployed in the PropTech space, according to our data, are really growing almost at 100% year after year, except last year, which was a historical crisis. But so we see more and more generalistic VCs willing to play a role as well in that specific vertical. So in Europe, for instance, we of course see PropTech partners who were as well involved as keynote speaker last year at Relevation, but as well ID Invest, which are two really large VCs dedicating a part of their fund specifically to the PropTech vertical. So we see this more and more. But now the question is for founders: do they want to have the money? Do they want to have the support from generalistic VC? Do they want to have the support from more specific, more personalized or specialized VC? So it's a big question you have to ask yourself as founder. Who do you want to have as investor? So I think it's where we will have where we will see probably the biggest competition in the access to deals coming. So yeah, that would be my take.
Sorry.
Alain touched on something really important, which is to understand the dynamics of the market into which you're selling. And I think that's where the combination, one of the things I really love about the PropTech investor scene is there are a lot of well-informed firms whose LP bases come from the space and can really help companies early on navigate that when it isn't just about money to scale, it's about understanding the market dynamics. Yeah. And then the fact that you've got your sort of regular generalist firms now all looking at it. And fundamentally, you have an $11 trillion global industry like construction that has very thin margins, virtually untouched by technology. The opportunity to expand the profit pool there is huge. And so there's a lot of opportunity for capital if you understand it's a highly fragmented, highly regulated, highly risk averse kind of industry that you need to transform. And it isn't going to be SoftBank writing a $2 billion check and the world changes in a week and a half. In real estate, you have the same thing of understanding those local dynamics of regulation, the way that the firms are structured, the kind of capital stack that they have. And so I feel like it's this really perfect opportunity where people are waking up to, hey, it's the world's largest asset class. It can be transformed. We need to have exposure and investment there. There are lots of interesting founder energy going into it, where you have a number of firms that can help these companies get started, and then the capital they need to really scale, because it is a global opportunity, because we've all lived in space everywhere.
Yeah, I think it's really interesting, to take that and that dynamic of the market and understanding, how patient capital should be. If anything, I've got a sense that the VC world has, become enamored with these incredible scale up, hop in, or what's the latest one that went from nothing to everything in a matter of 3 weeks. This never was the game. Right? The original game was silicon. The original game was quite patient capital, but an immense opportunity around exponential technologies and understanding that, that you were going to create and have the opportunity to really transform value. But it took time. Building an Intel plant took time. And I think we're back here. We are, as Travis says, we are at the edge of making technology work in the largest ecosystem there is. And, I'm really happy Travis started with this idea of productization and servitization of space, because the built environments where we live, that's why I'm still here after 15 years. It's incredibly important. And we've not been able to make technology really make a meaningful difference yet. So it's going to take that, original mindset of silicon technology is going to be transformational. It's going to be transformational. The opportunity is vast. Now we're going to need to iterate in a patient way and make that scale. I think that's what everybody's feeling.
Sorry, go ahead.
I would also add to that, and approaching it from a little bit of a second lens. We're also seeing a lot more real estate strategics coming into the space, and having a greater desire to participate in the ecosystem, both from an adoption standpoint, but also from a direct investment standpoint. And I think this has been sort of ever evolving over the past several years, but really seeing it starting to hit its stride now with how strategics are wanting to engage and participate and really be active at a very early stage in how they're involved in PropTech.
Yeah. Does anyone else want to add anything onto that?
Well, I just say, we having been investors in startup companies for a long time, we've really observed that there are kind of four major things that can drive change in a marketplace. It can be the creation of a new technology. It can be the broad adoption of a technology that enables you to do things the way you couldn't before. It can be the regulatory framework changes it forces people to adopt. And then lastly, it can be a shift in belief, where people start to think that doing something differently is the right answer. And what we love about the built environment and PropTech in general is all four of those are converging now on this space. And it's only been just pushed forward that much more aggressively in the way that we've all really thought about space in a different way in the past 12 months. So I think that's the reason why there is so much interest, enthusiasm in market participation.
Yeah. And sorry, carry on.
I was just gonna hop in and say, we also have to be very mindful. This is we say it's massive, but being so massive means that we probably need to be a little bit more specific. It's like for me, Asia. If I'm telling you I'm going to Asia, I'm not in Europe, but you don't know where I'm going. You don't know what I'm eating tonight. I might be eating idli in Hyderabad, or I might be eating, Szechuan hot food in China. Completely different thing. And so as soon as you think about construction and the built environment, are you talking about canals, or are you talking about building a residential tower? Are you talking about commercial real estate, or are you talking about creating a transaction space, which we call a shop, a brand experience? I think we're going to see that the whole ecosystem is going to change by people reconsidering that somehow we've talked about one thing called construction, and it's like pouring concrete. Nobody wanted to pour concrete. They wanted to create a retail shop or a stadium. Two totally different things. And second, we're gonna be looking at it also much more about what was the outcome I was trying to get from that thing in the first place. You know, I didn't want a stadium. I wanted fan. I wanted entertainment. I wanted home advantage. I wanted to put a show on, right? And then in that prospect, we created an arena, and the concept of an arena, the fully circular one, that was a breakthrough about 1000 BC, and then since then we haven't really improved very much on it. And so you're saying, right, so the technology is concrete, and the breakthrough design is Roman times. Now we're going to bring the next generation of technology. Look at an arena, an e-sport arena. Look at hybridization of space and hybridization of experiences for entertainment. We're gonna see things that are really completely different, but it's going to be by sector, because what I've just described doesn't work for a train station, doesn't work if I'm talking about I need a power network to make sure that the city is still powered up. So I think it's going to be a very, very very exciting space with many dynamics.
Making sure that we speak all about the same standards is one of the mission that we want to achieve with Relevation. And so this is why also we really try to emphasize on the fact that the scope of the event is any innovation, technological, technical, business model across the complete value chain of construction and real estate, and across all the different real estate asset classes. And so people can really filter by asset class, saying, for instance, I'm very interested about PropTech and logistics, because with pandemic and the boom of e-commerce, I'm really thinking that there is a huge opportunity there. Or I'm particularly interested in PropTech and healthcare, because of course hospitals could be much more optimized from a square meters point of view, etc., etc. So, but I'm agree with you, Alain, and I think actually that the punchline of the webinar is really that PropTech is like Asia.
And we've touched on obviously it being a massive growth. I can't remember. I think there's this. You guys probably know this. Stat last year was like 22 billion last year. Obviously, COVID. Everyone spoke about it increasing digitalization of the real estate industry. How do you foresee, and I'm sure you all have different stance and maybe different verticals growing, whether it's ESG, whether it's Contech, digital twins, I don't know. How do you see the level of investments sort of growing? Is it going to continue to be like 25% each year? Do you think it will go, as adoption happens, it's going to be even a higher growth? Is it going to be into a completely different sector? Who would like to go first? It's a fairly big question, but I thought it'd be quite a nice general one for everyone to give their stance, and before we sort of round off the podcast. Maybe Travis.
So I'll take a stab at it. So I wouldn't want to predict the dollars, but I'll say this: as long as adoption continues to grow, dollars will flow, and dollars will flow inefficiently. I mean, we tend to look at the number of transactions more than we do the dollar. The reality of birthing any startup technology market space is it's massively inefficient, and there's a lot of money on the sidelines, and it will chase that, and it will overfeed the system for sure. But so I would say though that I think that the market opportunity is big enough that we will continue to easily see 20-25% growth in the number of transactions that are happening, for the foreseeable future. We're still very early in this whole digital transformation of these two industries.
Awesome. Well, Alexandra, what are your thoughts on that?
Yeah, I think very consistent with what we've been saying I was going to say this morning, but this afternoon, whatever time zone we're all in. I think it's also going to be somewhat vertical dependent. We haven't spent, we haven't really touched that much on the single family residential space, but that's obviously a massive market, and for a number of reasons, seeing a lot of technology come into this space and a lot of dollars go there, and depending on the environment going forward has different sort of drivers relative to the commercial space. And right now we're seeing tons of investment on both sides, and question how those two sort of levers move relative to one another going forward. And that's not to say it's one versus the other, and depends on the focus of the capital and the expertise there.
Awesome, thank you for that. And Alain, what about you? What are your predictions? I'm sure you have a couple.
Yeah, I wouldn't want to predict. I'd be like, I'd be same as Travis. It'd be dangerous, but I mean, certainly what I'm looking at is area where capital will work, and the pump is going to work and accelerate. And I think for that you want slightly higher clock speeds of data and transactions, so that you get early market validation, and you can generate data that gives you the confidence to do more. And so if then I look at the Asia of our ecosystem, I'm looking in that sense at opportunities. So clearly there are some market segment. Alexandra mentioned, single family housing. What's great about that is that you've got lots being sold, and then if you can start saying, oh, this works, etc. And I certainly can see, for example, industrializing of construction. So moving from pure construction through product-based thinking of I'm manufacturing a space, I'm manufacturing an outcome, may even go as far as branded, and manufacturing single family house, definitely manufacturing office spaces that can be reconfigured. Definitely we see a lot of transaction, leases are 3 years, etc. I'm seeing productization of other category, like transaction space. We talked about retail. So I think that is very, very interesting. It's got the right smell. And then historically, I think what's really interesting, coming back to what Travis was saying about you need capital that understand the sector. Ultimately, property is investing into property, and it's trying to provide return to the investor with the right level of risk. And the way they've done that historically is turn that cash into concrete, and then either get the cash back through a transaction or through rental. What if the new way for the built environment, making return as an investor in the built environment, is actually thinking about, I didn't want to invest concrete, I was providing an office, I was providing a transaction space. And if you do that, then suddenly you say, as an investor, I understand this space, and I've been focusing on the wrong thing, like the concrete. I should have been focusing on the thing that I can't touch, which was the space. And technology allows me to do that, and I get a lot of data, a good night's sleep, my customers returning, etc. So that clock speed of data, very important. But the same investor.
Yeah, I'm surprised we haven't all mentioned the word data today. I think it's the first podcast we haven't actually in 5 seasons. Idriss, what about you? How have you seen the landscape evolving? I mean, there's a huge amount of more investment going into Europe. There's lots of startups also going from the US to Europe. I'm seeing similar growth from APAC launching obviously in the US and Europe. What's your sort of forecast?
So I don't have a crystal ball like anyone here. What I would say is that the US PropTech market, according to our data, is around 2,000 PropTech startups. Europe represents 3,123 according to the last survey of the European PropTech Association. So it's a very rich ecosystem. But if you focus on the European ecosystem, and if you agree on the 5 categories that we use, so really invest, finance, design and build, market, transact, manage and operate, and live and work to cover the end user experience, then you have to know that 50% or 60% actually that of all of the PropTech startups are either manage, operate, or market and transact. So these 2 categories represent the biggest, like the vast majority of the PropTech startups, and probably it's in these 2 segments that we will see the consolidation happening first. So meaning when the space will be digitized and there will not be much space left for new solutions, for new innovations, because it will be modernized. So this is the way we look at it. But what excites me is more the space more the space that was a bit ignored by PropTech so far, right? So the alternative asset classes of real estate, for instance, are maybe a space where we could see the next PropTech unicorn could be the rent to buy space. So in the middle between renting an apartment and owning an apartment, where you can combine these two experiences without the disadvantages. So this is for me a very exciting space, but we'll see. The conclusion is that it's a very exciting space where we will see a lot of unicorn but probably also it's a space that will help us to live a better life in a way. It's a space that will improve our daily life, the place where we live, the place where we work, the place where we commute, etc. So
yeah,
this is the way I look at it.
Yeah, I feel like everyone's personally invested in it, but a lot of people don't realize it. A lot of my friends don't quite understand when I say built environment innovation, and I sort of talk them through it, and they're like, ah. But I think for people out of the sector, it's a bit of a learning curve, but we're getting there. Team, we're coming to the end of the podcast, and how we finish it off is with the LMRE side. So L, lessons learned career, and mention anyone or a product that you want to give a shout out to. So that could be one of your latest investments. Are any regrets in your career? Now, it doesn't have to be super negative. It's turn it to positive. Then E, what are you most excited about? Idriss, you just mentioned obviously the one you were, but Travis, why don't you start us with I'm sure there's many lessons you've learned, but what's one standout lesson you've learned in your career?
Yeah, I think for us, and what I've learned over the years is that the critical thing that we care about and spend a lot of time evaluating is founder market fit. Everybody always talks about the people, and of course, it's about the people, but it's really about, are the people appropriate for the market? Do they love the problem that they're trying to solve enough that they will be relentless in their pursuit of it? And really, that's the kind of key. If I distill everything down into what we're trying to do, it's that. Those lessons. What was M?
M is mentioned anyone or a product or service.
I'll just say, yeah, it's unfair to name any favorite children. So I would just say, we're really excited about the portfolio we put together with our first fund, and we've started to deploy our second fund now. You can find out more about all of that on our website, which is just buildingventures.com. As far as regrets, I don't really believe much in regrets. I think that everything kind of leads us to our next step. It was the investment I mentioned in the beginning that Jesse and I did back in 2006 wasn't much of a financial success, but it forged a partnership and a friendship that has now allowed me to dedicate my career to this space and work with Jesse on it. And that's really been amazing. And then excited, I'm just excited for the attention that people have. I think that this year has made everyone look at it and say, what space do I occupy and what's it for? And back to what Idriss and Alain and Alex touched on, right? At the end of the day, all of this stuff in PropTech and construction tech is about, how do we provide and monetize a physical experience? Because that's our reality. And that's what all these solutions are trying to do. And I think the attention that's on it just means that there's going to be that many more, cool, interesting opportunities to work on.
Yeah, amen to that. Alexandra, what about you? You ready for the LMRE part?
Sure. All right. So L. So for lessons, I would say, really being a partner to everyone, not just your direct customers. I think, being there to add value and support to folks just in the ecosystem, I think comes around in a lot of ways, and something that we value a lot. I'll give a shout out to the rest of the Camber Creek team and our portfolio companies. You can learn more about them on our website. Regrets, I'm with Travis on this one. I think hindsight's always 20/20, but always good for learning opportunities. And then excited. What am I excited about? Everything. Just a big yes to that one.
I love that. We should all be saying we're super excited about Relevation, guys.
Yes, and that as well.
Thank you.
Alain, what about you? Lessons learned?
Yes, I wasn't going to focus so much on me. Lessons learned. I think live by your passion. You know, that founder product fit and market fit, I think, is a really good insight. And you know, I like to try to balance this. These very good word of Bill Gates, you know, we overestimate what we can do in 3 months, underestimate what we can do in 3 years. So how do you get early feedback so that you've got a plan, you stick with your plan, but somehow de-risk it by iterating early? I think that's that would be what I've learned over time, and that's why I'm still in the built environment and iterating. Mention, I think that's really where I wanted to focus. I want to put it on the theme of those people that are trying to change the built environment, that innovation, and you know, the list is very long. You know, I'd start with Travis and his building venture investment network, you know, but you know, we've got great people, Mace in London, trying to, you know, live it and show it and share it. I work with Burrows, the same, the Burrow partners, 60 partners, were, you know, saying let's make a difference. Epic Games, you know, to give you one that is, you know, how do we bring gaming technologies to the built environment? You've got founders like Hubert Romberg and this CRE system in Austria. You know, anybody that wants to make the market change for a better built world, I think, needs to be mentioned and celebrated. And sometimes from, you know, surprising places like the EU, and the DigiPlace initiative that says, you know, let's make the third platform come, you know, from the EU, a very European values around the built environment, and let's create an ecosystem for that. So I think they need a big shout out there. So at every level.
Awesome.
Okay. Regrets, je ne regrette rien, as we say in French. You know, just keep going. You know, learn more than. But what I'm excited, I think that would be, you know, the opportunity of being the generation of founders and meeting the generation of founders that are going to make technology work in the built environment. I really feel that, you know, the built environment is not changed. If you think in terms of technology, that the last technology was steel, and, you know, remove steel from New York skyline and you've got a flat place, you know, you can't see New York. And then you add light and you know, electricity, you remove electricity from the New York skyline, you still, you know, have a big dark thing, you know, it's transformational. Then we've got silicon, the most powerful technology invented by man so far, and there's been no change. So that tells you that, you know, in the next 20, 30 years, things are fundamentally going to be completely, totally, inimaginably different. Yeah. And that is exciting.
Yeah, I think Michael Beckham and CREtech, they always talk about, you know, the hot topic is obviously reimagining real estate, you know, how we see it now, how it's operated now. It's going to be completely different in 5 years. So that unknown, I personally find super exciting and interesting. But Idriss, last, definitely not least, yes. Let's hear your lessons.
Well, my lessons, I think my lessons is really know your values, know your drive, to avoid to lose you, right? And so I listened to a very inspiring podcast called The Burnout Manifesto from Gabriele Parisi, explaining that if you have this graph of your values and then your skills, you have what is life taking to you. So you go to work not motivated, etc. And you have what is life giving. And so make sure that you're in the life giving, which is where you have your passion. So it's not really important to have your skills there because you can still learn, but very important to know your values and your drivers, I think. Next letter was M. So the mention, I think I will mention you, my dear Louisa, for organizing this podcast, but I would like also to thank all the other participants who will of course be present at Relevation, but it's a pleasure to have you, and I think it was a great exchange, a great teaser of the 2 days event. So thank you all for that. The regrets, maybe actually it's not a regret linked to my career or indirectly linked. I would say maybe try to find the right equilibrium between private and professional life. And I think it's the ultimate fight for everyone around the table here. But it's something that we should reflect on, at least on my side. And what is exciting, I think, maybe because I'm a positive thinker, but I think the PropTech will allow us to live a better life in a better planet. But in the same time, when I was listening to you, Alain, I was also considering the fact that we should avoid to have a generational fracture, a technological fracture between the younger generation and the older people who are not able to adopt technology. So I think we should also be careful about that. But long term, probably PropTech will make us live in a better planet. So those would be my my answers.
Awesome. Thank you for that. Going back into your point about finding the balance between private and professional, since you've been sort of working from home, but also being involved in this sector, which is just growing and growing. It's so hard to find that sort of off switch. And now events are going to start cropping back up, and I think we're all going to start flying and maybe meeting each other in person. Who knows? I think it's going to be even more difficult to do that. But thank you all for coming and joining us on the Propcast. Idriss, I can't wait for your event. It's going to be amazing. I'll be sharing all of our guests' names, company websites. So check out their portfolio companies, look at what investments they do. If you're a fan, reach out to them. If you want to join Relevation, you need to get in touch. We'll be sharing all that information. And yeah, I guess thank you all. And Travis and Alexandra, I hope you have a great rest of your day. It's very early for you two. Thanks for starting early. And I'm looking forward to catching up with you all after the show.